Come, let us prepare, make some good profits this week. Market left us big clues right here. Now let's talk about this in today's video. And this will come as no surprise to you if you watched my last video on Sunday. I talked about this beautiful liquidity here, if you remembered, with the yellow algorithm, because you saw the 20-day moving average trailing that yellow algorithm together with that very beautiful blue algorithm right here with that liquidity. Even prior to that, I talked about this. Now, obviously, we are not trying to predict this, but you are aware of the blue algorithm at play, and you see the tapering blue algorithm at the top here. I talked about this blue algorithm as well in the Discord server right here, where there was, as I mentioned, unfinished business. And you see that happening here. We did grab that liquidity quite cleanly over there. But most importantly, if you were watching my videos, you would remember I talked about, very importantly, that blue algorithm if this wants to drop. So you see very beautiful moves right here, but you don't have to catch the entire move. Now, I only caught a very small part of the move, and I could still make almost $40,000 just with 7,000 to start with. So you don't have to catch the entire move. And as I've shown you day in, day out, you can do this every single day. So I don't want you to be coveting this. I want you to be learning how to have the skill to be making money every single day. And let's talk about that in today's video. Now, right at the start, you saw the magenta already building liquidity here. So this became quite straightforward. You saw the pink already building liquidity here as well. Now, there is a lack of bullish control. And I mentioned this, that there is a lack of bullish control. You do not go long until you see the bulls or the pink algorithm starting to build more liquidity. And you see how it rejected off the pink. That was absolutely beautiful. Now, if you missed this early candles, that's absolutely all right, because it's the same old algorithm right there. And I will show you that in a while. 947. Now, this was important because once you identify the magenta algorithm, it becomes really straightforward here. 947. As early as 947, because you understood the magenta algorithm that was building the liquidity at the top. So wait for the cups to close, right? As drastic as this cup close is, it's the same idea, because you have to wait for that 5-day, which is this yellow squiggly line that I'm annotating here. And for your orange, you see the orange building liquidity together with the magenta. Absolutely beautiful as it continues its way down here. Now, there's one more very important level, which is your 20-day moving average. Let's take a look at that. One more beautiful move here, 1141 right there. All you got to do, wait for that 20-day moving average, which is this magenta level here. And once again, you see the market building liquidity. Penny perfect with that orange. And you see that happening here, isn't it? Absolutely beautiful trade. Now, don't despise this particular trade here. This is 5 points, just like that. Just one move here, 5 points right there. And magenta started building more liquidity even for another leg down. You see how penny perfect that magenta is, isn't it? Penny perfect right there. So as long as you unlock the magenta algorithm for the day, which we did so at 947, remember, right here at 947. Once you unlocked the magenta algorithm, all you had to do is to wait for structure for the entire day here. You do not have to catch the full trade, even if you miss this initial trade. Absolutely fine, because from the news and the initial reaction at 666 all the way to end of day at 653, that's still 13 points. Can you see that? But if you lost focus right here, emotionally and psychologically, you would have completely missed the entire move. What will you be doing? You'll be losing focus. You'll be trying to call for the reversal at every opportunity. And in this case, there was absolutely no reason to call the reversal. I talked about this pink algorithm, right? I said you have to wait for pink to start building liquidity. You have never seen it trade above pink for the entire day. Penny perfect. Take a look. Why do you want to call for the reversal? And so all you had to do, wait for magenta in orange to start building liquidity and make as much money as you can on the way down. Absolutely, absolutely beautiful day. As long as you are prepared. And what I mean by being prepared is understanding the macro structure. And this is how we prepare every single day. And more than just preparing for the macro structure, it's also training yourself and practicing every single day. So when the time comes like today, you are prepared, not because you knew what's going to happen, but because you are already prepared, trained, well practiced, and you have become more skillful because you put in the work every single day in order to extract a day when the market is kind to you. And that's what it means. We can do this every single day. You see me do this every single day. So whether this is a big day or a small day for the market, it is just another day that you report into work and you make profits. You find profits in the charts. You take what the market gives you and you go back, enjoy your life and feed your family. You understand why you want to do this. But to a gambler, this is enticing to them, isn't it? So you have to be very careful. Some of you are approaching trading, you are approaching the charts with the heart of a gambler. And trust me, you are actually on the path of self-destruction. You cannot be having that toxic heart of gambling. If you see this as an opportunity to strike it rich, then you have a problem. Let me tell you that. You have to, therefore, learn the skill, develop the skill, so you can do it every single day. Now, if you want to make profits from the stock market, plenty of opportunities. This is not the first time this has happened. In fact, it happens many times in a year, especially with all the volatility we have now. So you are never missing out. In fact, some of you are into the stock market because of what happened during the pandemic and GameStop. Some of you have picked this up because you have seen people make big money posted online. And you see, if you come here with the wrong intentions, with the wrong motives, you will eventually lead yourself to destruction. You have to remember, you have to start with the right heart, with the right intention, with the right motives, and you will learn to triumph over this instead of allowing the stock market to destroy you. Very important, right? We do this every day. I've shown you that we can do this every day, regardless and despite the market conditions. Good, bad days, we can do this. We can find profits, extract profits from the charts every single day from the rest of our lives. So you don't covet days like that. Remember, do not covet this. You have the appropriate skills to extract profits from this. You can do this for the rest of your life. So for those who are struggling after Friday, please recenter yourself this weekend as we come back for the next. And you're all ready, because let me tell you, this is going to be big. There's so much volatility right now in the market, and we'll be ready for what's next. Let me prepare you for that. Now, where do we go from here? It's important you understand where we at, how this happened. Now, if you remember last week's video, I talked about this. I talked about the blue algorithm. It's important you understand that we were tapering at the top range. You notice the blue algorithm just cannot break through at the top of the range. Now, we had unfinished business here, as I was talking about. This was clear as day. If I zoom it in, I saw the blue algorithm building liquidity here. Now, you can't time this because you see how strong the head was right here, and we even tried to retest the head. So you just had to wait for the 5-day moving average retest, because you saw the 5-day moving in near to that liquidity here. This is a buildup of liquidity, 5-day coming to where the main liquidity range is. So you had to wait for the 5-day. Now, if you were trading, day trading, of course, wait for 5-day. You see, it's clear as day, because you saw the magenta and the orange building liquidity, especially off that 5-day moving average here. So you can't afford to wait. You cannot be timing for things like that, right? Just this particular candle. Sure, if you caught it, well done. There's a technique to that. I will show you to the Discord members, especially when you do zombie trades. But otherwise, you still can't afford to wait for the 5-day. And as I mentioned to you, from here, 667 all the way to the end, it's still 13 to 14 points. That's absolutely crazy. From here, that initial reaction, it's only about 6 points. So you still have double the runway for the rest of the day if you continue to remain focused, and you don't always have to catch the initial reaction. Because for all you know, this could have bounced. This could have, you wouldn't know that. So you just have to be very careful. So understanding this, the macro structure, and how to use the algorithms to capture the trade here. Now, most people, they lament this, because they don't have the skills to decipher or to analyze and make a better decision for themselves. Later on, they have to depend on initial reactions to make money. Don't be that kind of person, because you are just practically gambling. You're waiting for a shock result. You're waiting for an unexpected result in order to make money. You cannot be like that. You are a gambler if so. But we, a little different here. If you're watching this, you're a little different, isn't it? You're waiting for certain clarity in the structure that started forming, especially the 5-day right here. Now, so wait for that microstructure here. I've shown you how to translate this in a 30-minute into the 1 minute, and becomes crystal clear, especially with the understanding of that magenta algorithm here. Right, so right here, you see what happened. We had unfinished business, as I talked about, and we grabbed the liquidity quite simply. There was the expected range that I talked about here. So the expected range back then was 673.9, I think. I remember that. And another one was at 665, which was here. And 665 was important, right? Because I talked about this level. 665 was where the yellow algorithm, together with the 20-day moving average, and of course that blue algorithm, where that liquidity here was. And you see we converged all our liquidity here in order for this to break out. Now, once it broke out of the expected range, the selling intensifies, because this is where most people have placed their stops. And once you trigger the stop orders will become sell orders in order to start pushing down even further. And this is why you see the volume will start increasing on the sales down. So likewise, your expected range back then, when we were talking about it, was 665, I think. That was where the 20-day moving average was. And likewise, wait for the market to build liquidity. And you see the beautiful liquidity of that magenta right there. Isn't it? You see it for yourself. Magenta, absolutely, absolutely beautiful. The market took almost 3-4 hours to build liquidity right here off that very important expected range at 665, triggering stops, giving us the final 1.5 hours all the way down here, all in that pink algorithm here. Absolutely beautiful. So you could wait for the expected range as well, all the way down to end of day at 653. Now, this is important because you have to understand this was also at where the upper Bollinger is. Just take a look for yourself. Look at the upper Bollinger, and we see how the 5-day started trending down. Now, obviously, only trended down now because of this big day that we had, this big red day. But this is important information. I'll talk about that shortly. We have retested the upper and the bottom Bollinger together all in one single day. Now, this is important too. I will talk about that and how to be waiting for that. Now, obviously, everyone is calling for the reversal of some sort because the market has reversed plenty of times from negative news this year alone, and now obviously from the tariff news. But I want to show you some information here, right? What happened in February? Then we had, including a very large red candle, almost retesting the top and bottom Bollinger. Now, I want you to see when the bottom Bollinger is tested, there is a possibility it can start trending down. So you cannot always buy at the bottom Bollinger, especially after a red day, hoping that it will immediately bounce. Now, this is another way of telling you that you do not catch the falling knife. Not yet. Wait for the knife to show that it's not falling anymore. And very importantly, I want you to see that the instance where that happens is when the 5-day crosses below the 20-day moving average. Now remember this, these are very key indicators. When 5-day starts trending down below 20-day and it continues trending down with the bottom Bollinger, this can absolutely continue to head down. You see that it can continue to head down. Now, it's not bearish yet in a way because we are still above the 200-day moving average. So back then you see it started rebounding off that 200-day moving average and continuing its way down here, all the way down to, well, that very fateful day here where we had a 50 point on SPY. People are expecting this. They truly are. You have to be very careful because the market took a long way to tumble down before we had something like that. So people are not usually very forgetful, so you have to be very careful here. Now, the first thing you have to watch out for is if the bottom Bollinger continues to trend down, if the 5-day moving average continues to head down, and especially crossing below the 20-day moving average, because if this heads down like that, we can, well, continue to trend down if we want to. This is known as the falling knife in technical speak here. So you just have to be very, very, very careful. Look out for this. Don't always be calling for the bounce. There's confirmation for the bounce. Absolutely. And I'll show you that in the 1-minute chart and the 30-minute chart as well, because we have built plenty of liquidity, especially near here and the 20-day moving average. So you can afford to wait for that. I'll show you in the 30-minute chart here, especially here where the magenta algorithm here is. Right, so there are some very key levels here where if the market rebounds, you can catch it. But at the meantime, use the macro indicators to help you make better trend decisions here. So in this case, if we do cross below 20-day, you have to be absolutely careful if this continues to bounce all the way down here. Watch out for that. Watch out for that. If this wants to rebound, there are several ways you have to look out for. The first will be obviously a retest of the bottom Bollinger, right? The second one will be if the 5-day starts to plateau and bounce up, you will see there's plenty of opportunities where 5-day turn into some sort of support and retest the 20-day moving average. The third case instance will be when the 5-day crosses above the 20-day moving average. You see the 5-day here, which is this yellow line crossing above your 20-day and bouncing off both 20 and 5-day, going all the way back up to the upper Bollinger. Now, if you missed that 50-point day here, we still went up another 130 points since that day. So I want you to see the grand scheme of things, right? This was the 50-point day. Even from that 50-point day, we went up another 130 points. So you don't always, of course, this is a zoomed out version, a daily chart here, but it's the same logic. You don't try to catch the initial reaction because there's still plenty of money you can make. People are so fixated on making money on that same day, but they forget you can make money every single day for the rest of your life here. You would have made more money throughout that time compared to that one day in April. Right, so that's the thing. You have to have the right mentality when you come to the trading floor. Don't come here hoping to get lucky. I want you to come here knowing you can beat the market every single day and take money from the charts every single day for the rest of your life. That is so much better than the market giving you a handout. You cannot have the mind and psychology of waiting for handouts. You will not go far in life. You may find some success here and there, one day, another day, but you're just setting yourself up for ruins otherwise. So just be careful here now. Now let's take a look at the 30-minute chart here. Now this is very strong selling, right? We are almost in the green selling algorithm here. So first things first, if this is selling in green, don't call for the reversal. Absolutely not. You have to be more mindful about that. And obviously we have to wait for the orange. There is some tapering here at the orange. We may continue to sell more in that green and orange here. Now, this week's expected range will be where the 20-day moving average is. That will be about 665, that level, and one more at 640, or a little lower here, 640. So pay close attention to these two ranges here. That's the expected move for this week based on the volatility of the option. So it's great because once I see that, I know that there is going to be big moves in the market. 10 points up and down. This is going to be splendid for day trading. So stay focused and we can find lots of profits in the charts here. Now at this point here, it will be best if, well, the market does build some structure here. Especially if we do close the cup, right? You want to wait for some microstructure in terms of the yellow and the magenta algorithm here. That will be ideal if it wants to continue heading down. We still have another blue algorithm here as well. You have to pay close attention to that. That blue algorithm may be important, so I want to be looking out for that blue algorithm here. Now, if we do continue selling down in the green and that orange continuing down to the green. It's ideal if we build more liquidity at this level here. So watch out for liquidity building here off that blue algorithm. You may see yellow starting to build more liquidity on the way down if this wants to continue heading down to retest the bottom range of 640 at this level here. Once we get to 640, now there are more liquidity here at 636 level here. Now this is when we completely close the cup, and when the bottom Bollinger by then will start trending down together for the 5-day. So you wait for the 5 days to start trending down. If we do break below, firstly, the 20-day moving average and continue chasing down the bottom Bollinger, we especially do retest that 636 level. Wait for the cups to close. We do also have to wait for that blue algorithm to start building more liquidity on the way down. So watch out there for the 640 level. That's very important. Pay close attention to that. What you want to be more careful is if this continues to go down, as I mentioned. So pay close attention, please. I know it's very tempting to just call for the reversal, but if it's a falling knife, you don't want to catch it. Just be more patient. There will be many signs and confirmation if this wants to bounce. Now at this point here, pay close attention. If we are selling in the green, absolutely don't call for the reversal. If we are selling in the orange as well, do not call for the reversal. What you want to be looking out for will be that magenta at least. Now, magenta has built some liquidity here, right here. This is seen in that pink algorithm here, as I've shown you in that 1 minute chart here. This liquidity here near to that 660 level. So if your 20-day moving average trends down below to that 660 level, this is where it gets interesting, because the market has liquidity here that it can grab if it wants to head back up. So pay close attention to that. More importantly, there is more liquidity here near to that 669 level. Now pay close attention to the 669 because it will come in handy. Well, if not today, then in the future, where the 5-day comes back up to that range here. Now you see that happening, isn't it? That possibility. So pay close attention. If there is a reversal, you will not miss it because of the massive liquidity that's built here. On the 1 minute chart, you see it right here that's being built. Now more than just this liquidity here near the highs of 673, right? There is also massive liquidity that's built multi-day, in fact, over 2 weeks, and you can see that in the green algorithm right there. So there's plenty of liquidity here if the market wants to grab it back. And if it grabs back this liquidity, you can trust it to go even higher than the previous highs. So you can't afford to wait. Wait for what again? 5-day, 20-day, and wait for the break of the major algorithms right here and right here, and wait for liquidity to build off that 20-day moving average and magenta algorithm right there. And if the 5-day bounces back to the green algorithm, you are ready to grab that liquidity near that 670 level here and 660 level here where 20-day moving averages. So pay close attention to that. Wait for this, as I mentioned. Look at the daily chart. Wait for the 20-day and 5-day moving average. Now, quite a lot of information here. I want you to stay focused. The market will have many good moves. Remember what I mentioned as well, and have your mind recentered. You must know why you're doing this, and we can do this every single day. Don't be coveting days like that. Yeah, it's good money. Yes, of course. But the point is, you can make this money every single day. You certainly can. So don't be too greedy. In fact, days like this, you should scale down. You will make even more money, as I've shown you. So thank you very much for watching. I'll see you closer to opening bell.